morning, everyone. Today is the 5th of December, so it's just started a new month, and it's going to be the last month of the year, right? We're basically 2 weeks, maximum 3 weeks away from the end of the year. After that, it's going to start the holiday season, Christmas, and there's not many opportunities after that. So welcome to the weekly market analysis. My name is Pedro. I'm the senior market analyst at Alphachain. And we're going to go through the charts and to take a look at a little bit of the key points that occurred last week, and maybe what we can take a look at for the week ahead, and some key levels across the different assets that to look for, from the major FX to the major indices, and maybe some commodities as well, right? The oil market, for example, which is going to be interesting. What's going to happen now with the EU restrictions and the cap that is going to apply on the Russian oil, and maybe as well the easing that's going on finally on the COVID restrictions in China. Yeah, so welcome, and let's go. Yes, last week, of course, we had the first Friday of the month, which therefore we had the NFP, right? It was two big points that occurred last week. It was, first of all, last Wednesday, we had the Fed Chair Powell speaking on a conference, explaining his view of what he has been doing, of what the Fed has been doing during all this period, and again, it keeps with the same perspective of bringing the inflation down. However, the tonality has changed, right? It's not as hawkish, and the market basically has been pricing in that situation into the markets. And I think it's a little bit more in alignment at this point, comparing it maybe what the market was expecting previous months, already kind of expecting always a little bit of a dovish approach from the Fed. But that was not met. But this time, I think it's starting to be. Question mark is just for how long the Fed is going to continue to keep these interest rates at this level. It's going to still increase it a little bit more, expecting to be maybe above 5% by the middle of 2023. But question mark is going to be when is going to be the reduction of the interest rates, right? Maybe in 2024, that's what the market is pricing in. Is going to take longer than that or not? That's going to be the key point. And then last Friday, and actually on Wednesday, when we had that conference, we saw the big jump across all the major indices, and the move to the downside on the dollar index, for example, right? The gold went up as well. So we saw the reaction, the enthusiasm in the market after that press conference last Wednesday. And then we had last Friday NFP, right? So it came out as at 263, so 263,000 new jobs, which is much higher than what was expected. It was a little bit lower than the previous month, but it was again a good number for the NFP, right? At this point, we keep with the unemployment rate at 3.7 in the US, and it was quite it was a really positive number. If I'm not mistaken, the main sectors that actually helped to have this good number, it was, give me a second. Yeah, it was basically in leisure, hospitality, and healthcare where we saw increase in the employment. And on the other hand, there was a decline in the retail trade and transportation and warehousing. That's the sectors that we saw a little bit of a reduction in the employment, which is quite good, right? It's another situation where we see good news. The way the market reacted, that was quite the opposite. In the moment, we kind of had a good number into in the NFP. However, we saw the market crashing immediately after that. However, by the end of the trading session, we saw the big U-turn and basically price reversing and almost closing the day last Friday at the same level where it was just before the news. Right? This is still kind of goes in alignment with what has been happening across during this year between the good news, bad news, and bad news, good news. And when is actually the market finally start to align, where we have good news and price, and the market is going to treat it as good news and not as bad news. I think that shift is going to start happening more often than not, because I think it's a little bit now acceptable that the Fed is going to have a different approach, a little bit. Not continue to increase at 75 basis points, but to 50 and then eventually just 25. And the market is already accepting that, right? I don't think it's going to be because we may have a stronger NFP data that the Fed is going to kind of change this approach at this point, right? I think it's a little bit acceptable what's going to happen from now on. And eventually what may occur, and maybe that's going to be for 2023, is when we're actually starting to have bad news and market's going to react the bad news as actually bad news, right? Maybe when you actually see the unemployment to actually increase, and we'll see until what point is going to do that. Expected at like 4.3 or something like that. I think that's what the Fed is predicting, maybe for the end of next year. Yes, in that moment, maybe actually starting to have bad news, maybe the market's going to actually react as a bad news, and maybe that's when you're going to see maybe another move to downside in the indices. Another really good thing that came out from the DOT report, it was the average hourly earnings, right? It was at 0.6%, twice as the size that the market was expecting, and even higher than the previous month, right? At this point, if I'm not mistaken, the average hourly on a year-to-year, I think it's at 5%, 5.1 maybe. 5.1% when it was expected to be at 4.6, which is quite good. However, it's still below the inflation, right? Inflation at this point, it is 7.2%, the CPI. So it's still, even if it is at 5.1, people are actually still kind of earning less than they were comparing with last year, just because of the inflation. That this needs to change, right? So that's what the Fed wants to do. They want to push the inflation back to that 2% level. And yeah, some people may say that because of this earnings, like the increase of the earnings as well, is kind of pushing still the inflation to the upside. Maybe on the other hand, maybe that's not really the cause at this point, right? Maybe the cause of all this inflation that occurred, not just because of maybe people getting a little bit increase in their earnings. It was actually maybe due to all the printing that occurred during COVID and so on, all those benefits that the government was giving on a regular basis that helped to bring this inflation to the stage where we are right now. Looking at this week, what you may have is, it's not exactly a busy week in terms of the data. We are going to have today you're going to have the SMI services PMI. We had the SMI manufacturing PMI last week, if I'm not mistaken. It was below 50 for the first time of the year, and maybe even 1 year and a half since summer 2020, that it was not below 50. So in this case, we see the contraction in the economy with the manufacturing, and today we're going to take a look at the services, right? So it has been decreasing, as you can see, since the beginning of this year. It's decreasing, but it's still kind of a little bit below, a little bit far away from below 50. The manufacturing, that actually went below 50 for the first time after a long time. We are going to have some interest rate decisions going on in the Aussie, for example. It's going to be this night, actually overnight, expecting another 25 basis points. The same thing happening with the Bank of Canada, right? Another 25 basis points towards to 4%. Australia is actually the Reserve Bank of Australia, it has been one of the first banks to have a little bit of a more conservative approach. They were concerned about the increase of the interest rates and the impact it would have to the households and to the income that it would have. That's why they kind of slowed down straight away. It was one of the first ones, and at this point it's still quite lagging comparing with the Fed, for example, right? Even with the Bank of Canada, which is at 4%, and this one's going to be at 3.10%. The week after, the next week, the week that starts on the 12th until the 16th, maybe, that's the one that's going to be the big and the last big week of the year, right? So we're going to have CPI data on Tuesday, on the 13th of December. So we're going to have the last CPI number of the year, and then you have FOMC on December 14. Then you have Bank of England, even the SNB as well, straight away in the morning, and then you finish with the ECB interest rate decision as well, right? So next week is going to be full of central bankers' decisions, and it's basically the last big week of the year before maybe then closing down to Christmas, right? Yeah. After that, it's going to be just 1 week before Christmas, and maybe we're going to start seeing less volatility in the market. So yes, our eyes are going to be towards next week, starting with the CPI, and straight away after that, the last FOMC meeting, and the ECB and the Bank of England as well. So there you go. The major central bankers, all of them, they're still going to make decisions up until the end of one last decision until the end of the year. And if we take a look at the markets, right, how the markets have been reacting. So we start with looking at this dollar index. Dollar index is an asset that I quite like to look at it, and I think it's important because it can give you straight away a good overview of what to expect from the major FX pairs. And this is what you can see, right? So we had the first move in here, second, this one in here, last week. First of all, this was during the Fed Charles peak, during that conference, and then you had during the NFP, right? We had this move to the upside, and then straight away the rejection to the downside. So we can see this move to the downside on the dollar index. This is how price has been moving, weaker dollar, and that's why you're also seeing a stronger move to the upside within indices, right? That has been the correlation that we have seen during this year: strong dollar, weak indices, or weaker dollar, and strong the indices, and then kind of strong gold as well, and it goes on with crypto as well. A level that we have been looking for, right? So price finally broke these lows. It was something that we have been talking about during our morning calls, and a key level that I have been looking for is exactly the retest of this high back in 2017. So this key level in here, this level of previous resistance support in here on dollar index, could be an interesting zone maybe to see some kind of reaction around 104. That's a key point that I want to be paying attention to this week. And there's even maybe the potential to even continue and maybe even going all the way back to maybe close to 100 level. But for now, this level in here is something that I want to be paying attention to see how price is going to react from there, and how it's going to move from here, right? It's already a little bit of a rejection from that level. We have this fresh demand zone in there, which is something that price hasn't really reacted from there, and we are having that reaction. Price is moving a little bit in a compression way. Basically, this strong move last Wednesday, it took really nicely that level, and now took this supply as well. And let's see if even break this high, there's maybe a chance to start looking a little bit more to the upside, or if today we're just going to continue to move a little bit lower and with a little bit of a weaker dollar. There's a few zones underneath to keep an eye on. However, this key level in here, 104, and maybe even the next one a little bit at 102, 103 can be interesting, and even maybe taking this low altogether. So that's for the dollar. Something that I also like to take a look at is to see the euro index and the yen index. That you can take a look at it in here, right? So euro index, has been going upwards, which kind of goes a little bit in alignment as well. How the euro has been moving a little bit to the euro dollar, in this case, to the upside. However, actually last week we saw a little bit of a range in here, right? We saw a little bit of a move upwards, but a little bit of a range. So last week it was not a week focus on the euro. We saw a little bit of the euro dollar going upwards, but we saw euro pound, euro Aussie, euro yen, for example, going to the downside, and that's why we kind of got stuck in this middle of this range without price actually moving. But today we are seeing a little bit euro index, for example, euro pound, and even euro yen as well going to the upside. Not exactly euro dollar actually kind of doing the opposite, but we are seeing a little bit of move to the upside. It was a nice reaction from here. I had this low as a key factor in here to see if it would be broken in order maybe to see a little bit more of a continuation to downside. That it was not really broken in there. And I think we have a little bit more room to even go and continue to the upside, especially if after breaking this high in here. So it's a key level to look at on this euro index, and let's see how it plays out. This one again, it's a good asset to take a look at, because it gives you some overview of maybe what to expect from the euro pairs, and if they are correlated as well with the euro dollar as well. And it's a nice way to look at it, right? And to see the strength on that specific currency. For example, the yen index, it has been one that has moved quite strongly last week, opposite to the euro. It was ranging. This yen index actually moved quite strongly to the upside. And if you are looking for trend continuation setups, this was maybe the one to look for opportunities on the yen pairs to try to capitalize on these moves. So yeah, we had it. It was a nice zone. So what you see in here on this yen index is kind of the opposite than what you're going to see on the yen dollar, euro yen, pound yen, and so on. Like if you see this yen index going to the upside, the opposite move is what you're going to see on the dollar yen. So yeah, moving up in here, moving down on the dollar yen, and it reached all the way through this key level, that supply level. That's where it's reacting from, and after that we have seen this yen index going to the downside, and we actually are seeing now euro yen, pound yen, and so on going to the upside, right? Key levels being respected, breaking, and to just follow through, which is again another good asset to take a look into it, and can help you as maybe as an indicator to find good opportunities then on the specific currencies that you're going to try to trade from. So this is a nice level. It was still fresh in there. This supply in here had been taken by this high. This supply was still fresh. Price just reacted from there. If you do break above this level, there's maybe opportunities to go a little bit more into that level, and eventually maybe even going a little bit above this high. This high in here. This is something just to keep an eye on. Key level now, maybe let's see how price behaves in here, or if price just wants to go and retest maybe this previous level of resistance, can work as a supply maybe. There's a little bit of maybe something in here, but I wouldn't be surprised if price actually goes below these lows, or even then kind of retests now this something in here, something around this level. And if by any chance now, for example, if I'm looking for price maybe to continue to go a little bit further down in here, I can go to the euro yen, dollar yen, and so on, and try to maybe find opportunities, or try to find a zone where maybe price wants to go to, and to keep moving to the upside, right? So the way you can combine these two is, for example, again, key supply level in there. If you by any chance you are seeing that dollar yen, for example, euro yen now are reacting from a good zone, maybe a good level of support. And if these two kind of combine with each other, that's maybe a good confluence and a good indicator to help you to decide, okay, I'm going to look for the trade in that specific pair. Carry on to the indices. Nasdaq, S&P, and Dow Jones, right? And even a little bit out at the DAX as well. So yes, Dow Jones has been the one leading all this retracement to the upside since all this since the retrace back in October. All this move to the upside. We already took the high from August, sorry, from this bullish rally that we had in here in the summer. Then we continued the bearish momentum that we have seen during our year, but now we just broke above this high in the indices, right? In this Dow Jones. Price reacting from a good level in here. This level in here, it was still fresh. And let's see now, right? So we had that massive or strong move to the downside during the NFP. Price went up a little bit. Price kind of reversed straight away. Price literally just took the demand during that drop. And let's see, this was still a supply. Curious to see if we keep respecting these highs and maybe continue to downside, or if by any chance we do respect this wall. If you keep respecting this wall in here, there's the potential to look for the continuation setup. If you break this wall, there's a potential to have maybe a good retracement, and I could even target maybe all the way back to almost 32,000, something like that. There's maybe something in here as well. But yes, if you do break below this one, which for me it's already actually broke that level, I think you could see a little bit of a move more to the downside. But key level in here, this zone needs to be broken first to the downside to give you that confirmation. But it's going to be interesting to see in here if you can find some kind of maybe good entry as a sell, even just retesting this level. Or if you want, you can keep some open to it to see if this level is broken or not. Looking a little bit more to the upside. So this one is a good level on the daily that price is just reacting from, and let's see how it plays out. Otherwise, we may target this 35,000 mark as a potential zone for the Dow to go to. So Dow Jones has been the one leading on this rally to the upside. S&P has been the one kind of in the middle. We are just approaching this supply in here. This was created with a CPI number back on the 13th of September. Strong move down. That supply was still fresh. We saw price basically almost reacted from there, or it may have reacted from there. Spike down, reacted from this level. It's up. It's a little bit the same pattern that we are seeing across the different indices. Specifically on this one, S&P, we do have this trend line as well that is kind of helping to see the trend, this upward trend line. If we do break the trend line, they may give indication that price may want to go lower. Aside from breaking the trend line, I would actually like to see maybe this low also to be broken. Maybe this one as well could be, but this is for me the last month zone that actually broke these highs. So this for me is a key level to see being broken. If you break it, there's maybe a chance to start looking for maybe continuation to the downside, but price can just do something like this before it goes. I still see maybe some key levels in here at above this highs. So somewhere in there, there's going to be some kind of opportunity for a short. Just manage your targets. Don't really look for, at this point, there's no point of looking for a 7 here all the way there, because there's no confirmation that that's going to happen yet. But at least some reaction maybe on an intraday level. If that's your time frame that you like to trade, maybe you can find something in there, right? Again, the major news are going to happen next week related to the Fed and to the US economy with the CPI data as well. So let's see what's going to happen in there. Nasdaq is doing a little bit of a different story. Again, is lagging comparing with the other ones. So just to have a perspective, if you take a look at what DAX is doing, DAX already broke this high. Not DAX, Dow Jones already broke this high and kind of is trading in there. S&P is kind of reacting from this level, somewhere in here, and the Nasdaq is literally lagging comparing with the previous two indices. Like S&P, Nasdaq is still reacting from somewhere in this level. This zone in here hasn't really been broken yet. We actually had kind of this double top. Price actually took a little bit of that double top last week, and let's see if we're going to continue to move to the downside or not, or again key level in here to see if it's going to be respected or not. If you do break above this level, I think there's a chance to continue to go higher. I do have this trend line in here as well, this bearish trend line, which goes all the way back to the highs of the year back in January. Kind of got almost touched in there back in March. Now it was touching here in August, and let's see what's going to happen afterwards, right? So if you like to find maybe double top setups, if you are a counter trend trader, maybe there's something to look at it around these highs, or if you like to look for breakout setups, maybe waiting for the price to break maybe the highs again, and maybe now with continuation that may occur, right? Even as a target, can be even the retest of that level, or even just the next trend line. Maybe there's an opportunity in there for you to capitalize on it, right? DAX, on the other hand, is actually trading at a line with these highs back in June. So it's going to be interesting to see how it's going to play out. Actually, DAX kind of, if you include the other three, it's one reading, right? Dow Jones broke this high, S&P is kind of trading in here, and Nasdaq somewhere in here. Even though they are not kind of as correlated. DAX is not as correlated as the other ones. But yes, so key level to look for it. Let's see if you have any move to the downside from these levels or not. The key level that I'm looking for still is somewhere in there, in alignment with this level. If price by any chance decides to go higher, that will be maybe a zone that I'll be looking for. A potential reaction to the to the downside after taking this high in here back in March. But this level for me, it's kind of important. I think we may have the opportunity, because we actually broke this low, kind of entering into this compression, at least maybe to test that level, and I think we can have that, right? So a new level that occurred in here after we broke this low, kind of we opened space to fill out this space up until this correlation, to fill this compression in there. However, when you move to the upside, we reacted now from the supply, took the highs from here, but we create this demand zone, right? And this demand zone has been basically touched already in here. Was this today? No, yeah, this was Friday during the NFP. So this demand has been respected, not exactly broken, but at least kind of took the orders from this level. So it's weaker. Maybe price has the chance to break it now after reacting all the way back to this supply. So there you go, right? You had one demand in here, supply in there, and that's kind of what these indices have been playing around it. Yeah, let's see which zone is going to be broken first. There's a chance to look for a reversal in there, and that's basically it for this for the indices. Now, if we take a look at the major effects, and actually let's take a look at oil as well, because oil, as I mentioned, is in an interesting moment. Where is oil? Yeah, oil is in an interesting moment at this point, because today, 5th of December, is when the sanctions from the European nations start. So they have kind of agreed to cap the price of Russian seaborne oil at $60 per barrel, and at this point, oil is trading at 82. Right, that would be a big discount in that regard if that was about to happen, right? Even the crude oil is even at 87, and this one is at 82. So that would be kind of a $22 discount or $27 discount from where the European nations wants to agree that, which is it's quite big, right? And you can imagine how Putin is not satisfied with that, because actually Putin has repeatedly said that they will not supply oil to countries that implement the price cap, right? So that's one of the situations that's going to be interesting to see how the price of oil is going to adjust to that to this new approach. Something that also happened, and that maybe it was discussed for a while with the OPEC meeting, it was a potential reduction of production, which was not realized, right? So that never happened, that didn't really occur. And at this point, the next OPEC meeting is actually just scheduled for February at this point. So it's quite a big delay, 1 month and a half, basically 2 months of delay of the gap between the next meeting. On the other hand, that may affect the price of oil is, of course, right, the easing on the COVID restrictions in China. 20 of the big cities are, of the larger cities, from Beijing, Shanghai, Hangzhou, Tianjin, and some others are easing their zero COVID restrictions. For example, they are no longer requiring a negative PCR test to enter in a public venues or taking public transportation, right? So slowly they are trying to open a little bit more the country. I think you guys may have seen across the internet some of the videos of what's going on in China and the way they are treating their population. But yes, so China is trying to ease up a little bit in terms of the restrictions, which may occur and may increase the supply side in the oil market. So it's going to be interesting. Are we going to start looking for a move to the upside on the oil? As you guys know that we've been following the morning calls, I always have been looking for oil to at least target this low before moving to the upside. That has occurred. Price actually took that low last week, exactly 1 week ago on Monday, and it reversed after that, right? So we had all this compression all the way back in here. One key level that I was looking for, it was this retest of support resistance in here at 77. That occurred for a moment until price finally moved lower, and it finally completed to feel this compression that was happened on the way up, and usually that's going to be seen fulfilled on the way down. And this well, it was quite obvious all the way through to the next demand zone that was just underneath it, and it's a good move to the upside. If by any chance, since for example, this is a target that we've been looking for, right? This is where the European Union are targeting this the price at 60. Yeah, that would be too much. It's going to be interesting to see how everything's going to play out and the price of oil in the next few weeks in here. But I could see, so we just broke this high as well. Price we kind of respect a little bit that level. We actually broke this low as well in this moment. So maybe there's a chance even to go maybe a little bit further. For example, something like this could occur, retest this level of support resistance. There's another supply here that is still fresh. This one has been taken already, and then maybe drop just to go down and maybe respect something in here to then maybe continue to go higher. So there are, again, this level in here, 83 or 84 can be a good zone to look for a potential short. Again, manage your expectations based on your targets. Don't look always for big trades if the trade is not there, but at least some reaction there could occur. You kind of have a little bit of extra demand zones underneath it. There's a chance that even price can maybe just respect this level for a while as well today. Maybe there's some fresh orders somewhere in here, but let's take a look at it and let's see how the oil market is going to react. So yes, looking at the major effects, we saw the euro dollar going upwards, right? Even after the big rejection or the big move to the downside during NFP, price went to the upside once again. We even managed now this Monday, this week already after market open, to continue to the upside, which we're just retesting this level. And let's see if we're going to continue to go higher. We have this key zone at zone of resistance at 106 can be interesting for price, and I wouldn't be surprised if by any chance you even kind of take these highs and maybe find a little bit of a retrace to the downside. There's maybe some supplies in there that price could react for, but it's already way too many highs. Do you know what I think about it? So eventually you could actually move or find some sales even after that, after the break of the highs. Meanwhile, in here, let's see if today price holds it or not, or if we just continue to go higher. So euro, the same way that is approaching that level, it's a little bit similar to the dollar index that you are looking at. So yeah, that's for euro. Pound as well, quite similar, moving upwards, and we just took a massive major highs on the pound, not even this one, but even this one in here, and we are reacting now from a good level there on on the left side, and we'll see. I wouldn't be surprised if even eventually target this high altogether for the future, but maybe you can see a little bit of a move to the downside. It was similar the move on during the NFP, strong move down, and straight away retesting previous level of support resistance and rejection straight away to the upside. There's maybe a chance to look maybe for some opportunities to look for sales in there close to the highs for this week or even today, and then we'll see. Overall, as you can see, we are in a clear bullish trend all the way back since October, right? When September actually, when we had all that situation with the mini budget in the UK. Yeah, so pound going higher as well. Australia, that's going to have the interest rate decision later on tonight. It's another one that is moving to the upside, but has been a little bit more of a contraction comparing with the other ones. I still have an eye on this level to look maybe for some kind of reaction. Price is getting closer. It's creating a lot of levels of resistance here, a lot of highs. Price went down, respect this level, and I wouldn't be surprised if by any chance you may have something like this happening, and maybe then we finally have a little bit more of a retracement to the downside, right? So I have an eye on around this level for the Aussie to see if there's anything important in there to look for a potential sell opportunity, a little bit of a retracement after all this move to the upside for 1 month and a half, basically almost 2 months of a bullish rally on the Aussie. Dollar yen, as we have seen, strong move to the downside, was one of the assets, the pairs that moved the most last week, as you could see as well on the yen index that we just analyzed before. Key level in here that we were looking actually last Friday at 133, somewhere in there could be a good level to look for an opportunity, and price basically almost reacted from there. And then we may look all the way back to this low from the 2nd of August, right? That we kind of started this new cycle to the upside after we had made this move, price retraced, and now this kind of the new move to the upside. So strong move on the end after the second time that the BOJ interviewed back in the 21st of October. Yeah, strong rally for 1 month and a half at this point, and there's maybe an opportunity to eventually see some kind of retracement a little bit to the upside. We have this strong level in here, and there's even the chance to go maybe a little bit higher after that. For now, we definitely need to still kind of break a little bit more of a high to look for that continuation. I'm not sure if prices touch the key level, so this demand zone may still be fresh, and price maybe can even retrace a little bit, maybe go there, touch that level, and maybe look for the reversal. So we are looking at this strong move down, and maybe there's the time now to look a little bit for a potential reversal, right? Usually the currencies, they don't really trade for that long without a little bit of a retracement, at least kind of even a bearish retracement or a bullish retracement for it, 2 weeks at least, 2-3 weeks, maybe until they resume the move that they've been gone through. Dollar CAD, again, dollar CAD is going to be another one that's going to have the interest rate decision on next Wednesday. It has been quite interesting all the move again around the same time. Price reversed somewhere in here on the 13th of October. It was one of the last CPI datas that came out, and now it's kind of in the middle, right? At this point, it's not really one of the easiest assets to trade. It's a little bit in a range. Is it going to continue to go up? It's just retested kind of this previous level of support resistance after this move upwards, retraced. Is this a final destination? Personally, I may still see eventually CAD to go higher, but it can go down first. It can maybe even go down somewhere in here before maybe continue to go to the upside. We'll see where the dollar CAD is heading to. And then dollar franc Swiss, it's another one moving lower. In this one, bigger picture, I think I see it going a little bit further down, but this actually is a good key level, like somewhere in here and in here. I think they're going to be important levels for the dollar franc Swiss to see if they can manage to be respected, and maybe price can go higher. Otherwise, we may, if we break this low, kind of may enter into all this compression, and there's a good chance that we're going to at least feel all the way through until maybe 0.9 level. I don't like this zone in here, just underneath this low. It's a level that I'm going to be looking for sure whenever price gets there. Can be a little bit more of a compression move, more moves like this until maybe it gets there. We'll see. But this can be a good zone of barrier support that price can be respected, and a little bit underneath in here. Otherwise, we may see we can maybe see actually all the way to the downside, right? It's a good move from these highs. We went all the way down, we broke a few lows in here, went all the way back, we respected the high, we didn't broke the high, we respected the high, and now maybe can eventually bigger picture. I don't know when it's going to happen, maybe next year, I don't know, but I could see dollar franc Swiss to, in the bigger view, to continue to go down. And gold, right? Gold has been another one. It's respecting now the high, an important high in here back in August again as well. Actually just took it. It took this morning. Interesting. It took this morning. It was actually something that we were looking for last week. We kind of took a little bit this high, respected that one all the way back to respect the demand, and now it just finally took the high, right? So we kind of maybe open a little bit more room that you want to go higher in the future with the break of this high. But after breaking such an important high, it's actually a good level to start looking for sales, which is quite interesting to see, right? Our price kind of took the high, even took this one as well. And let's see how price is going to start behaving in here. Are you going to maybe look for a reversal as well? Is kind of the question of this week. Maybe is price starting to show indication that is ready to have a reversal or not, right? Goes from dollar index to the indices to gold, oil as well, and the major FX, right? Is price ready to, or starting to show some indication that maybe we're going to be close to show some kind of reversal? The indices to go down, the dollar to get a little bit more, gain a little bit momentum after such a strong move to the downside for the last few weeks. That's maybe the question. Or if you're going to have a little bit of a slower week, just waiting for what's going to happen the week after that, right? Where you're going to have those massive news going on. So that's basically the overall view of it. We can just conclude a little bit with crypto space. So if you take a look at Ethereum and Bitcoin, let's even start with Bitcoin that just broke a new high again today. We are in this bullish rally at this point since basically since the 20th of November. So it's almost 2 weeks now in this bullish rally. We just took a little bit slow. It looks like a double low in there. And when are we going to stop it, right? So this was a key level that I was looking for. This demand zone, price which we respected, and since it's respected, I'm not longer even looking for a sell in there. Just continue to rally to the upside, right? Where is maybe the target in here can be interesting, but maybe even targeting a little bit higher can be interesting as well. But there's maybe something in here where price is reacting now that can sustain price for a bit. Again, until I see a proper wall being broken, maybe the approach it will be to continue to look maybe for some trend continuation setups in here. It depends on the time frame that everyone is looking at. Bigger picture monthly and so on, and weekly and monthly chart, it may still look a little bit bearish, as you can imagine. Price is actually reacting from there. It's actually reacting from this zone in here. It's not bad. So yeah, key levels somewhere in here could be interesting, maybe around the 19K mark, maybe go back to 20. 20K is already maybe a little bit higher, but that's where actually the next supply is. So it's going to be interesting to see where Bitcoin is going to, if it's going to continue to just keep driving like this, or not. It's a little bit like the correlation that has been happening with the indices. It may be a little bit disconnected at this point. The correlation that is happening with throughout this year. At this point, it's kind of behaving a little bit differently. So it's gaining a little bit more independency comparing with the other assets, the other risk on assets, and Ethereum, right? Ethereum is another one, kind of created this double low. It keeps going upwards. In this case, it respected the demand for a moment, but the next level, it will be the support resistance. So after we broke it, key levels, right? Respect demand. If the demand is broken, look for your next target, which will be another level of support resistance, or maybe even the demand after that. Personally, I think I'm still looking a little bit higher. I can maybe see some kind of reaction in here. However, we did broke this high already after we created this one. So there's maybe even the chance that actually price wants to just continue to go higher. In here, Ethereum is a complete different story. Looking at the charts comparing with Bitcoin, right? Ethereum has never broken, or hasn't yet broken the low since the summer, opposite to Bitcoin that has broken, and it's quite well. It has moved way below this key level. Personally, if I have to be honest in here, I would even like to see Ethereum eventually taking this double low in here, maybe reacting a little bit closer to that level, almost close to the $1,000 mark. That's kind of where I'll be. I wish I could see that happening. On the daily time frame, we actually see that this bull candle actually already broke that high in there, so there's potential to go a little bit higher. This key level in here can be interesting, right? It's a little bit of that fresh level that I see, and price maybe can react from there and go down. And yeah, why not? Why not taking these lows before maybe making that massive move to the upside? Yeah, so let's see how crypto space as well is going to play out this week. Again, next week is going to be the big one. Maybe next week it's actually when you're going to see the big reversals or big moves. Maybe this week is going to be just a preparation, just price maybe compressing a little bit, not moving too much, a little bit in a range before actually then you have next week the big move, either to the downside or to the upside. It depends where it goes, but maybe that's when it's going to happen. Okay, so thank you so much for watching, guys. I will stop the recording now, and you can have some Q&A if you have any questions.